So good to have you join us today. Hello and welcome to Business Daily. I'm Jung in Seoul. Before we get started, let's first get a quick glimpse of today's highlights. With Iran emerging from international isolation, China has been eyeing the oil-rich nation for more economic opportunities by extending its reach and boosting bilateral relations. A new bill that will clear hurdles for businesses here in Korea is expected to pass the National Assembly. We'll sit down with an expert to talk about this so-called One-Shot Act. But first, Korea grew in the 2% range last year, failing to reach the government's desired growth range of 3%. The economy showed signs of recovery in the third quarter on the back of government measures, but the pickup was short-lived. Our Hwang Ji has this report.
Weighed down by slowing global and domestic demand, the Korean economy grew 2.6% last year. This marks the slowest pace of expansion in 3 years and comes as the economy was hit hard by the MERS outbreak, as well as sluggish exports mainly caused by the slowdown in China.
The contribution of exports to growth dropped for the sixth straight quarter in the last quarter of 2015. Domestic demand was responsible for 2 percentage points of growth in the third quarter, but that dropped to 0.8 percentage points in the fourth quarter.
Despite the pickup that the economy showed in the third quarter last year thanks to a number of government-led sales events to jumpstart spending, the growth rate more than halved in the last 3 months. The Bank of Korea attributes the slowdown to a drastic drop in investment in the construction sector, prompted by weakening home transactions. But some experts say there is a silver lining ahead on the export front.
Korea is expecting the free trade deal with China and entry into emerging markets like India and Vietnam with high potential purchasing power to improve exports.
Still feeble overall global demand and oil prices, which are hitting fresh lows, remain some of the major concerns for this year. And with a majority of foreign and local institutions expecting Korea to expand in the 2% range again in 2016, Finance Minister Yoo on Tuesday once again urged ministries to do their best in front-loading their budget spending in the first 3 months. Markets are also seeing mounting expectations for more monetary easing by Korea's central bank to prop up weak recovery momentum that will further drive down the key interest rate that already stands at a record low of 1.5%. Hwang Ji, Business Daily.
The market capitalization of Korea's biggest conglomerates has tumbled nearly 5% since the turn of the year on the back of increased overseas volatility. Korea Exchange says the combined value of the nation's top 10 groups was $602 billion as of Monday, down 4.5% from the end of last year. Of the groups, Hanwha stocks posted the biggest drop at over 9%. The total value of Korea's securities market has dropped over 3.5% since the start of the year. Analysts say the figures show that falling oil prices and the U.S. rate hike have been negatively affecting Korea's export-driven conglomerates. Chinese President Xi Jinping was one of the first world leaders to visit Iran since sanctions were lifted against the oil-rich nation a little over a week ago. Now, Beijing is already Tehran's biggest trading partner, but China is eyeing more opportunities in the Middle East. Our Jung has more.
It was the first visit by a Chinese president in 14 years. After touring Saudi Arabia and Egypt, President Xi Jinping concluded his 5-day regional trip in Iran, becoming one of the first world leaders to visit the oil-rich country after nuclear-related international sanctions were lifted.
I'm happy this visit took place after the historic nuclear deal and lifting of sanctions.
In the meeting, Iran and China pledged closer economic and political ties by signing 17 deals to work together in areas including energy, transportation, and tourism. They also pledged to boost trade to up to an annual $600 billion in the coming decade, more than 10 times the current level. The two countries also signed an MOU on jointly pursuing Beijing's One Belt, One Road trade initiative that seeks to link China with Europe by building infrastructure projects across the Middle East funded by the world's second largest economy.
We will cooperate in various fields and further deepen our friendship.
Also cooperating closely with Iran is Korea, which has been actively working with Tehran to boost trade and investment, lifting restrictions on business with Iran and establishing a support center in Seoul to help those looking for new opportunities in the oil-rich nation. But experts say Korea may need to step up efforts to cultivate even stronger ties with the Islamic Republic so that it does not lag behind in the competition with neighboring countries. Lee Ju-young, Business Daily.
It's been extremely cold here in Korea over the last couple of days, and these sub-zero temperatures are freezing vegetable supply as well, leading to a surge in prices. Now, this is bad news for not only for customers, but also for merchants. Our Oh Soo-young has this report.
The price of fresh produce has shot up in the past week. A kilo of radishes now costs around 57 cents. That's 54% higher than last week. The price of other vegetables have also climbed by 20 to 40%. These include staple foods for Koreans: cabbages, lettuce, pumpkins, and chili peppers.
I'm wary of buying vegetables because the prices have risen so much. It's probably because of the weather.
It's not just customers that are feeling the blow. Due to the Arctic weather conditions in Korea, local merchants are seeing a reduction in the number of vegetable shipments from their suppliers. And the situation has worsened with their limited stocks freezing up in the cold.
We put the vegetables out on display anyway. The next morning, they're all frozen up. No one asks for them. Most people just walk past because it's cold.
Fruit prices haven't yet been affected, but households and merchants are worried because Lunar New Year is only 2 weeks away, and the celebrations involves tables laden with fruits and other kinds of produce. It all depends on the weather. The Korea Agro-Fisheries and Food Trade Corporation says produce prices will stabilise once the extreme weather conditions subside. Oh Soo-young, Business Daily.
The so-called One-Shot Act is set to pass the National Assembly on Friday with hopes of revitalizing corporate activities. But there are concerns that this could give major conglomerates an even larger footing and expand their scope of influence. Take a look.
The so-called One-Shot Act, which was drawn up by the ruling Saenuri Party, aims to revitalize corporate activities by easing regulations and providing tax cuts when companies voluntarily sell off or buy businesses. It also supports mergers and acquisitions by simplifying legal procedures.
The bill will help business restructuring efforts regardless of their size. It would increase firms' competitiveness and value, eventually benefiting small shareholders and contractors as well.
But the bill has been sitting for over 6 months in the National Assembly because the opposition party wanted to exclude conglomerates or chaebol. The party had argued that if included, big businesses could take advantage of the ease regulations to carry out corporate takeovers and secure more power. But just last week, the ruling party and the main opposition Minju Party of Korea agreed to pass the bill at a plenary session set for Friday. The two parties agreed to deal with problems stemming from the One-Shot Act during the course of implementation through amendments in the future. This comes amid growing calls on lawmakers by the government and businesses to stop dragging their feet on economic reforms. Once passed into law, will this act boost Korea's economy by providing room for greater growth for businesses?
And to tell us more about this, Professor Yang Joon from the Catholic University of Korea joins us in the studio today. So good to have you here.
Happy to be here.
All right, so what are the main reasons for this One-Shot Act having been devised? I mean, I know the slowing growth has been a problem for a lot of companies here in Korea, but what kind of difficulties have they faced when it came to restructuring their business structures?
Okay, well, in order to have a dynamic economy, it's not only important to be able to establish firms quickly, but also to close down your firms or very quickly because that will free up your resources and entrepreneurs can get onto the next project. Now, what's traditionally happened in Korea in the past is that these firms, which are no longer viable, sometimes they've been kept on for a long time through things like zombie companies where the banks keep making loans to these companies even though they're not viable for revival, or they've just straight gone out of business and with a factory just closing down and people completely going out of work. Now, if you're able to sell those firms off to a more capable entrepreneurs, or if you can sell it off to existing firms, then you can at least keep parts of that company alive, keep parts of those jobs alive. So this M&A is meant to design, it's designed so that you don't have to completely close the companies down or give loans to unviable companies, but try to revitalize them by selling them off to more viable entrepreneurs or managers.
And I know we briefly mentioned in this report that we just saw now about what this One-Shot Act is, but what exactly kind of changes are included in this One-Shot Act to the current regulations, and how is this expected to, I guess, help businesses and their restructuring efforts?
Okay, there's all of these are sort of changes on the margin. For example, if you're doing an M&A, then you usually need to issue new stock. Previously, if you're issuing stock, which is more than 10% of the outstanding stock, you can do it through the board of directors, but any more than that, you had to go through the stockholders.
Okay.
But now that range has been extended to, say, 20%. The so-called quick M&As, where you could just buy outstanding stock to take over a company. Previously, you had to buy 90% of that outstanding stock in order to control the company. Now, that's been lowered to 2/3 of the outstanding stock. Holding companies, if you're using that to maintain the subsidiary companies, previously the holding companies had to hold 100% of stock. Now they only need to hold 50% of stock. So it's things like that. Everything that which can take more time and more effort to do M&As, they've tried to lower those barriers. One problem, though, is that the stockholders meeting can be bypassed in a lot of these situations, and that has a lot of people worried.
All right. And also, some say that this act could also be abused. Can you tell us where these concerns are stemming from? Okay,
well, as mentioned in the report, part of the problem is that chaebols may be able to use these laws to buy out their potential competitors. That's one problem. Another problem is, well, there has been a lot of problems about corporate governance in Korea.
Right.
And this does give power for the board of directors to overrule or just don't go to the stockholders to make their decisions on M&As and such. And that has a lot of people worried because Korea traditionally does not have a lot of controls to help small stockholders.
All right, well, stretching this out a bit, after the news was out last week that the two rival parties agreed to pass this on Friday, steelmakers and builders actually finished bullish on Korean stock markets. Do you think these sectors are going to benefit the most from this act?
Well, there's been a lot of press that some of the provisions of this law was specifically designed to help overcome problems that we have in the shipbuilding industry. Because of the global recession and the rising China and Japanese shipmakers, these shipbuilding companies have been in a lot of trouble, some three big ones in particular. And there has been rumors in the past that the government was trying to merge at least two of them into a stronger survivor. And I guess that kind of rumors are being paid off right now.
And I also heard that this One-Shot Act was actually benchmarked after Japan's business revitalization law that was established in 1999. Now we want to know, how much of a success has Japan seen since this was implemented?
Okay, well, according to some of the research institutes which have carried out a study on this, they looked at 440 companies which took advantage of these laws. Most of them were actually small and medium-sized companies. And out of those, most of them have performed better. 170 have become so better that they started hiring more workers.
Wow.
So this one-shot law in Japan is credited for creating 70,000 new jobs. Having said that, though, there's an important difference between the Japanese version and the Korean version. Japanese version applied to every firm which wanted to do M&A. On the other hand, the Korean version is applicable only for those companies which are, quote, suffering oversupply in the market right now, unquote. And we're not quite sure how they're going to determine this oversupply. So that's something to be worked out practically in the future when they start to implement this law.
All right, and there are also a lot of growing hopes over this act that this is going to be a better thing for our corporate front, which has been struggling a lot last year. But aside from this act, what other changes do we need to see on Korea's corporate front?
Okay, well, culturally, Korea has not been very excited about M&As. You usually have a company which is identified by the owner, and this is not only true for jaebors, but also small and medium-sized companies.
Okay.
So traditionally, Korea has been very reluctant to sell companies to do M&A. So even with this new law, there's some questions over whether M&As would be facilitated by this law because, well, this makes M&As easier, but M&As were legal in the past and there hasn't been that much M&As in place.
Right.
So we'll have to see how much M&As this generate. Another problem that can come up is traditionally labor has been very much against a lot of these M&As because they're afraid that they'll be downsized once they absorb.
Yes.
So how we deal with labor, that's also going to be part of this big picture.
A lot of questions that we need to think over. Well, this is going to be passed on Friday. Thank you so much for coming in today, Professor.
Thank you.
And that wraps it up for today. But we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching and see you soon.